Ladies and gentlemen, good day, and welcome to the JTL Industries Q1 FY'25 conference call, hosted by Nuvama Wealth Management. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. I now hand the conference over to Mr. Souvik Mohanty from Nuvama Wealth Management. Thank you, and over to you, sir.
Thank you, Sagar. Good morning, all. We welcome you all to the JTL Q1 FY'25 conference call. We are joined today by the senior management of JTL Industries, represented by Mr. Atul Garg, CFO, Mr. Pranav Singla, Whole-time Director, and Mr. Dhruv Singla, Whole-time Director. We will now start with the opening remarks by the management, followed by the Q&A. I would now like to hand over this call to Mr. Pranav Singla for his brief opening remarks. Over to you, Pranav.
Good evening, everybody. Thanks, Souvik, and thanks, Nuvama, for hosting the call for us. And thank you, everybody, for joining us today. I am delighted to welcome you all to the JTL Industries earnings conference call. We will be discussing our financial performance for the quarter one of financial year 25, as well as providing an overview of our ongoing capacity expansion. Before we delve into the details of our results, let me briefly provide you an introduction of the company. With 3 decades of experience, JTL Industries has grown into a rapidly expanding, reputable player in steel tube manufacturing. Our product range includes ARW black steel tubes, galvanized pipes, large diameter steel tubes and pipes, solar structures, and hollow construction materials. We specialize in producing vehicle products like galvanized pipes, which ensure superior quality standards and impeccable finishing across all our offerings. JTL operates 5 cutting-edge manufacturing facilities across India, located pan-India in such a way that 2 of our plants are in Punjab, 1 in Maharashtra and 1 in Raipur. We recently did a takeover of 70% stake in Nabha Steel Company, which is also located in Punjab as well. In June 24, we successfully launched the first phase of Nabha Steel and Metals, achieving sales of 10,000 tons. This milestone has a significant step in JTL's backward integration strategy, enhancing our product portfolio and positioning us as one of the top solution providers. The integration is expected to improve yield, generate synergies, and boost profitability. In Q1 FY'25, JTL Industries delivered a stable financial results, demonstrating sustained growth year over year. Our revenue for the quarter reached 5,153 million, up from 5,050 million last year, driven by strategic market expansion, increased product demand, high sales volume, and enhanced product offerings. EBITDA for quarter one FY'25 stood at 438 million, reflecting a 21% increase from quarter one FY'24, underscoring our efficient cost management and operational excellence. The EBITDA margin improved to 8.5% in quarter one FY'25, up from 7.2% in quarter one FY'24. Driven by a strategic focus on higher margin products and increasing scale. Sales volume grew by 10% year-on-year, reaching 85,674 metric tons in Q1 FY'25, compared to 77,342 metric tons in quarter one FY'24. Notably, VAP products contributed 25% of total sales mix, with sales volumes of 21,261 metric tons. Quarterly exports stood at all-time high at 7%, and the total of export sales were 5,917 metric tons. I'm open to questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Parth Kotak from Alpha Plus Capital. Please go ahead.
Hi, thanks for taking my question. Congrats, Pranav, for a decent set of results. So I just wanted to get an update on Nabha Steel. We are manufacturing HR coils over here, which will be used for backward integration. So some 10,000 odd metric tons of sales that we've received is not the sales volume, right? It's just the volume that we're using for our backward integration.
So what the process over there is, thanks for the question, first of all. So right now, Nabha is in a phase which is not currently making the exact product that we require at JTL. It is about a quarter away from the products that we require at JTL. The product that we are delivering at Nabha right now is sellable in the market right now. That's what we did this quarter. And being it a partnership firm as of now, so the top line and the volumes couldn't be added to JTL this time. It is in the process of becoming to a limited company, which will happen this quarter. And accordingly, everything will be added to JTL afterwards.
Okay,
But
perfect.
later on, it will be making coils, as you mentioned, which will be used for our backward integration. For now, we sold everything in the market.
Super. I think that's really helpful. And so then the revenue that we've generated from Nabha basically has, I think, mentioned in the note is included in other income. Is that the right understanding?
Only the share of profit to the extent of 70% is what is included in the profit, and that's all.
Okay. Which would be to the tune of about 4 odd crores. So I just wanted to know the contribution that's come from Nabha, because I'm asking this question primarily because in order to calculate, although you've given the breakup, but EBITDA per ton, then we don't include either the profitability or the volume from Nabha, right?
I'm not, I don't have the exact amount handy with me, but about 96-97 lakhs was the EBITDA of the PBT from there.
Okay, perfect. That's really helpful.
Yes.
That's it for now. I will join back the queue if I have further questions.
All right. Thank you.
Thank you. The next question is from the line of Bhavesh Chauhan from Aditya Birla Money. Please go ahead.
Hi, sir. Sir, in terms of channel checks that we did, it seems like competitive intensity in this pipes industry is increasing because the balance sheets of many of the companies have become stronger. So I would like to know what is your view on that, most of the companies are targeting 20-25% volume growth, but supplies are likely to increase much faster, maybe putting pressure on margins, maybe volume growth may not come in as fast as everybody's targeting. So what are your views?
Thanks for your questions. So we are fairly positioned well in the market and have a decent size ourselves as well. And given the capacity, we do face challenges at times, but altogether the Indian growth story is intact and so is the company. So a little bit of slowdown in the growth story might happen because of elections, and the VAP share might go down because of election that has happened in this quarter or the past quarters. But going down ahead, we see everything should normalize very soon. Even the exports have, if you see, it's the highest export we ever done. So everything globally has been improving, and we are positioned in the market in such a way that we are there in both primary and secondary both. So the dealer has to sell something. It's either primary or secondary. So we are in a lucky spot that we don't face a lot of pressures. So things are aligned, and the demand, when it becomes soft, we sell secondary more. When it's strong, everything is selling as equal.
Okay.
Also to add here, when we are expanding, what we are doing is not increasing our capacities in the current format that we have under production. So we are increasing our range and everything. So our aspects are of increase in SKUs.
Okay. And we had a weak quarter this time in terms of volume growth. I think we are targeting more than 25% volume growth. So is it that we are going to cover up in the next coming 3 quarters to so that average growth is north of 20%?
As we mentioned, our major capacities are coming in H2 by the end of H1. So the jump in everything would be visible thereafter only. And for to defend ourselves, it was a fairly 11% up quarter year on year, and given the industry and the whole election scenario. So that is something that we're decently satisfied with right now. And also the NABA volume, how I mentioned, couldn't be counted for in JTL right now. So if that was there, it would be 98,000 tons anyways in JTL. So altogether, everything is according to the target that we had in our mind and we told as well.
Okay, sir. Thank you, and all the best.
Thank you. The next question is from the line of Vikas Singh from Phillip Capital. Please go ahead.
Good evening, sir. Thank you for the opportunity. I just wanted to understand one thing. If I look at the YOY perspective, while my value-added product sales had percentage-wise declined significantly, I still managed to do better EBITDA per ton. So effectively, just wanted to understand, has anything changed in the product mix or is the function of something else?
In our range of products, what happens is that we are able to look into and produce those things which give us a higher value-added product. In value-added product also, there are thicknesses and sizes which give you higher returns than the other normal commercial material, which is, say, galvanized pipes. So in the first quarter, our value, even after our quantity of value added has decreased, we are able to maintain a higher EBITDA levels is because that we produce those smaller gauge and lighter thicknesses more in this quarter. So that is the reason that you see the quantity is less, because if I'm producing, say, for example, if I'm producing a higher dia and a higher thickness material in my galvanized pipe, I can even double the capacity. But at times when the demand is such, and also when we see that that we are able to make higher margins in certain products, so we have to sacrifice at times quantity to margin.
Also, because every company's way of telling their VAP products is very different. For me, I define everything which is above 7,500 rupees under VAP. If I bring that figure down to 5,000 rupees, my VAP share is already at 6%. So it's every company's way of defining products in the VAP category. Like, I don't have a lot of SKUs right now, so the basic things I mention is general commercial grade product and galvanized pipes. If I further break it up, the commercial breakup as well, which is bigger section pipes, like 12 inches of pipes, small section pipes. So all those demand a different EBITDA, which is towards higher EBITDA, how the other companies explain. But for me, right now the standard I have kept is only galvanized pipes as value added.
Understood. My second question pertains to our annual volume guidance as well as EBITDA per ton guidance. Given that majority of the capacity is coming in the second half and would take some time to ramp it up also, do we want to tone down our assumptions or we are still holding to it?
Whatever we mentioned before, we are confident on that, and everything is in line.
So basically, more than
in the first quarter, as I mentioned, NABA sales volume could be counted for as well. The numbers shows 86, which is 97 effectively. So if you think it that way, it's almost the same.
Understood. And just one clarification, basically, in NABA, the next quarter onwards, we will be merged, right? We will be merging it and would be a combined number?
It will be a subsidiary.
Okay, it will be a subsidiary. Fine. So one more question regarding the plans to have the additional 1 million ton in the Maharashtra. Any update regarding the progress, how much we have spent so far on that project?
So, Kazi, the DFT has already arrived at the plant. It's under the installation phase, and it's before time that it has arrived. We were expecting it to arrive later this quarter. Everything is in the plant, and it should be it is setting up right now.
Understood. And sir, just one last thing. In terms of demand side, basically, though the monsoon has started, but on a like-to-like basis, do we feel that the demand is better than the last monsoon because there was a long period of election and probably would have led to destocking? So your views on that, if you see that the demand is better than what it was in last season, or it's more or less similar? If you could give us some idea about that.
See, like-to-like basis, as we are growing every year, it's very difficult to give you a like-to-like basis. Our range has expanded as compared to last year, and this year also, we've added the kind of range that we've gathered more demand into. But see, monsoon has just arrived, and it's very soon to say what impact monsoon has affected. So it is just the first, say, fortnight of monsoons in India right now, and the impact is still to be found out. So I would still wait to comment on what impact monsoons had on demand.
Understood. That's all from my side. Yeah. Thank you.
Thank you. The next question is from the line of Aditya Welekar from Axis Securities. Please go ahead.
Yeah, thanks for the opportunity. So, just harping on this Nabha Steel's question. So, as you said, from next quarter it will be consolidated. So, just want to understand the sales volume from Nabha will contribute to our revenue side, or again you will factor it in profit from associate or profit from subsidiary.
Thanks, Aditya, for the question. So whatever there is an RTP, so that will be not accounted for in the, like, that's the process. And whatever we sell outside, the sizes that we won't be fitting in our mill, that will be sold in the market. So those will be coming in the profitability as well, in similar ways how subsidiaries numbers account for.
Okay. So, means out of the 0.2 million ton Nabha capacity, the first phase is now installed. So out of that, some portion will contribute to our EBITDA per ton increase, and some portion will directly contribute to our sales volume. Is that understanding right?
That's definitely right.
So any quantification of that split means how much will contribute to our external sales volume and how much will contribute to our EBITDA, that is our backward integration?
We won't be able to give an exact number on that right now.
So we won't be able to give an exact number on that right now, but in the future, what we'll have to do is we'll have to give you a standalone or consolidated statement so that things are more clear.
Yeah, fair enough. And on the guidance, once again, slightly harping on that. So we, in the earlier call, we have said that we are targeting 30% year-on-year revenue growth and volume growth for FY'25. So, and 40% VAP share. So with the DFT coming from second quarter, is that VAP target and revenue target in line, or you want to tweak that?
Everything is in line. There is no change in whatever you mentioned before. Everything is just as in line as mentioned in the first Concall, the last Concall.
Perfect. And lastly, on the, if you can throw some light on primary and secondary steel prices, what is the gap between the two, the Patra price and our normal HRC prices?
See, the last month's gap was around 3.5, 4 rupees. It's a very fluctuating market. The gaps are keeps on rising and decreasing, but we've encountered on an average during the year, the gap is more or less in the range of 4 to 5 rupees per kg. So, but having said that, now the use case scenarios of both the Patra and the prime coil material has been widely accepted in different markets. So for a light structural steel, people are now preferring, for gauges below 2 mm, people are now preferring Patra steel, and for gauges above 2 mm, 2.5 mm, people are preferring primary coil steel. So there's been a market use case scenario differentiation in that. That is more so how do we understand about it?
Perfect. That's very helpful. Thank you, and all the best.
Thank you.
Thank you. The next question is from the line of Pradeep Rawat from Last House Blue. Please go ahead.
Yeah, good evening, and thank you for the opportunity. So I have a couple of questions. So first question is regarding capacity expansion in the industry. So how much of the capacity are you seeing in the industry adding up, and do you see any threat that the capacity can grow faster than the demand growth? So the industry, thanks for the question, first of all. The industry is evaluated by the reports that are available online around at a size of 40 million tons. And the industry growth rate itself is above 14-15% every year. How the plants are being set up and being added every year, we personally are growing our capacity by 20-25% odd every year, and so are a few of our peers as well. But we don't see any threat to that because whatever SKUs or products that we are adding, they are new to the market. They are like not a lot of people are doing the products. So it's safe to say that we are in a very comfortable position, and the products that we are offering are unique in themselves. So there's no threat that we see as such. Okay. And sir, during the last call, you mentioned that we are seeing demand slow down due to elections. So how do you see demand shaping up now after the election? Demand has picked up from before, but the final flow of demand will open up after the budget. So it's a few days away from budget, and we should see new government orders lining up after that. Okay. So the demand is currently like lagging as expected. It's not lagging. It has improved from before, and it's on track as well. It's just as usual. And the major boost in demand from the government side is expected post-elections. Okay. Fair enough. And my third question is regarding, sir, our current capacity utilization is close to 55 and 60%. So why we are expanding capacity instead of first increasing our utilization? So can you explain the thought process behind it? So what happens is how you calculate the utilization of a company is, so on the same mill, you have to make a smaller size as well, which is lighter in weight, and you have to make a bigger size as well, which is heavy in weight. So if you are running a bigger size throughout the year, your capacity utilization will probably exceed 100% as well. But this cannot be done in the given market scenario, because when we have to sell a load of material to somebody, it's usually multiple SKUs that one buys, a dealer, maybe government or anybody. So to serve the market as a whole, one has to make multiple sizes throughout the year. That's why the capacity utilization decreases. And it's the industry standard that this is the utilization. And it's a good rule that after 65%, 60% utilization, you can think about expanding. Okay, so max utilization in our industry would be somewhere around 70%, right? It depends on what size the person is making. If we install DFT, the capacity utilization increases because the roll change time in that is less. So it depends. It varies machine to machine as well, but usually this is the given case scenario. Okay. Thank you. Welcome.
Thank you. The next question is from the line of Nitin Gupta, who's an individual investor. Please go ahead.
Hello. Am I audible?
Yes, sir. Please go ahead.
Yeah, thank you for the opportunity. I have two questions. First is with respect to the volumes. So, is there any ballpark number?
Sorry to interrupt. Mr. Gupta, we had lost your audio in between. Could you please repeat your question?
Is it better now?
Much better, sir. Please go ahead.
Yeah, I was asking how much of our volumes are dependent on the government order?
As of last quarter, not even 15% of our volumes was towards government. And usually our sales mix, how we do it in the past is that majority sales, which is around 50-55% is dealer network sales, around 15-20% is government, around 20% is OEM EPC players, and the remaining is exports. So that's how we usually divide it. But in the last quarter, not even 15% was government.
So just a suggestion, like, can we include that kind of information in the investor presentation, or it won't be, just a suggestion.
We'll take a note of it. We'll keep in mind.
Thank you. The second question is which I am having is with respect to the importing of DFT machinery. So in the last phone call, you said that maybe you can start a test production after the...
Mr. Gupta, we have lost your audio once again.
Hello. I was asking about the current status of importing of DFT machinery.
The DFT is already at the plant. It is being set up, and we'll give a formal notice as well when it commences, but it has arrived at the plant.
Okay, it is at the plant.
Yes.
Okay. And the last question would be about when you indicated about the fundraising plan. So there was a certain percentage from the promoters as a part of preferential, and the other one was for QIP. So any updates you have with respect to that, the QIP part?
We have taken an enabling resolution as a board. Whenever we'll be doing the QIP, there will be a proper notice given as well, but nothing on it right now.
Okay. Okay, got it. So that would be all. Thanks. Thank you and all the best.
Thank you. A reminder to all the participants, if you wish to register for questions, please press star and 1. The next question is from the line of Pavin Pandey from Athena Investments. Please go ahead.
Hello. Hi. Am I audible?
Yes, sir. Please go ahead.
Sure. Could you shed some light on how the demand scenario was in the exports market in terms of growth as well as trajectory going ahead?
We are only exporting now from our majorly from our Mangaon unit, which is located at the near to the Nhava Sheva port. So in there, again, all depends upon how many SKUs we are able to build for the entire export market. So now, since we are bringing the DFT also, there would be a substantial increase in the export demand. We are increasing our VAT as well. So all these things are happening in an organic way. Going forward, yes, regarding when we listen and read and see about how the world is changing from a only China model to a China plus one model, and being located right next to the Indian port, we have several opportunities to import and re-export to take the benefit of the Indian market and the scenario of free trades from different countries, and also there are at points certain restrictions to enter countries as well, like we are not country doing US and Canada. So all these things are there. But yeah, going forward, since we are increasing our SKUs, certain markets will open up and we'll be shaping better for the export market. We've already performed better in this quarter as compared to the previous year's quarter regarding the export market, and we had a considerable jump therein. So yes, we see that there is good growth in the export market.
And in terms of, as you mentioned, that the incremental capacity, the effect would be visible in H2. So in terms of expectations for NABA, are we expecting max capacity utilization to be sort of reached in H2, or I mean by the end of FY'25, or could there be some spillover to H1 FY'26?
No, everything is just in line as we mentioned before. There is no delay of anything in any of the plants.
Okay, that's great. And just one bookkeeping question, I could see other expenses have increased in this quarter, so if you could shed some light on that.
I'll have to dig deep on that. Probably I can mail you the answer to that. We don't have the exact clarity on that.
That's perfectly fine. Yeah, so congratulations on a great quarter, accounting for the fact that it was an election period, and good luck for the year ahead.
Thank you. Thanks, Pawan.
Thank you. The next follow-up question is from the line of Pradeep Rawat from Last House Blue. Please go ahead.
Yeah, thank you for the opportunity again. I have two more questions. So first question, how do we see demand shaping up in the next 1 to 2-3 years in scrap-based tube? and non-scrap based tube?
See, in primary and the secondary market, we again, like we mentioned in the beginning of a call, there has been a considerable differentiation in the end use case scenarios of both the kind of steel. So since primary steel is not offering low gauge thicknesses widely, and also when they are doing so, there is a considerable value-added charge on top of that, which in the secondary steel, since there is a size restriction and it's a miniature form of processing the same, they are able to do it in a cheaper manner. So those use case scenarios have defined both secondary and primary in today's scenario. And going forward, since steel is a direct replacement of wood in areas such as low-cost housing for your window frames, door frames, furniture, for the car sheds on top of the building, gates, staircases. So all these areas don't require a primary grade steel and can be done from a secondary steel wherein load-bearing structures are not required. So rather than having a direct comparison between both of them, I would say that there is a shift in demand due to the use case scenarios being multiplied in the recent years.
Yeah. Okay. So my next question is regarding our value-added products. So I can see that the volume has declined in absolute terms, and you have mentioned that the election was a reason for that. So I was unable to understand why election was the reason for that. So
not exactly. See, so what we said is, yes, we do supply a considerable amount of value-added products, which is only the galvanized steel pipes that we cater into the value-added product of our kitty. Due to the last elections and there was the government projects of Jal Jeevan Mission and all get stalled. So in those, the quantities decreased. But having been said that, I also mentioned that we were able to maintain higher realization on our value-added products, and hence the quantity declined because we were able to sell products that were higher in realization, which is the lower thickness, lower gauge material. That is the reason that we even after our value-added kitty being declined in number, the volume terms that you mentioned, we are able to maintain the beta levels that we showcased. So that's the reason that at times, due to the market scenarios, we have to forego higher productivity or volumes and cater to that higher margin business so that our bottom line does not get affected.
Mm-hmm. Okay, fair enough. And last thing about Nabha Steel, so I missed that at the beginning. Why we are not actively using the production from Nabha Steel?
So it is in the process in which the products that are being offered over there, right now, they are not suiting the quality that, or like the exact requirements that we require at JTL. So it is about a month away or 2 months away from the exact products that we require at JTL to make our pipes. So after that, we'll be using them in our Mandi Gopur plant.
Okay, fair enough. Thank you.
Thank you. The next question is from the line of Pallav Agarwal from Antique Stock Broking. Please go ahead.
Yeah, good evening and congratulations on a good set of results. So just want to understand on the capex part, so how much of balance capex is left to be spent on this 1 million ton expansion?
Thanks, Pallav, for the question. A sizable amount is left right now. We won't be able to quantify the number right now because we can't quantify the number right now.
Okay. And also, I think, in the results it was mentioned that, some warrants were converted into shares. So was equity infusion during the quarter, or this was just the money had already
No,
come in and it was just a conversion of warrants into shares?
it was just a part conversion of the warrants money that were allotted before, just a part conversion of that.
Okay. And so like, what is the amount of warrants that are outstanding, and, when is the timeline for that, by which those have to be converted, and what would be basically the money that would come to the company on conversion of those warrants?
So the promoters recently infused money in the company, and we allotted 2.5 crore shares, out of which 2 crore shares were promoter category and 50 lakh were public category. And the company raised a total of 600 crores. And out of that, being warrants, the promoters and the public category made 1/4 of the payment. So 168 crores is what the company received in Feb itself. And the rest amount, being the promoters, we have a cheat sheet. We know when the company requires money and when the company is in a comfortable position. Look at the numbers, the company is a very comfortable cash position right now. So whenever the company requires money, the promoters will make the payment that very moment. The promoters are in a comfortable position to make the payment overnight as well.
Sure. And over the, I think, and we broadly maintain a, target of, reaching 5,000 per ton of EBITDA over the medium term. Is that what the target is?
Again, really, everything is in line, and exact numbers is something that we cannot comment on right now.
Sure. Okay. Thank you so much.
Welcome.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Prathamesh Diwar from Tiger Assets. Please go ahead.
So, yes, sir. Just one question. I just wanted to know about the industry, specifically about the Jal Jeevan Mission. So, how much government is allocating for FY'25?
Thanks for your question. As of last year, the government allocated a total of close to $7 billion for the Jal Jeevan Mission. We are awaiting the news this year as well, but it should be somewhere in the same line, a little higher.
Okay. And so any other water initiatives like Jal Jeevan Mission that government is doing and their allocation on that? Let's say Har Ghar Jal and any other?
So it's the same mission only. It's the same, Har Ghar Jal is the same mission as Jal Jeevan Mission. And it's just that different cities have different things going on, but it's the same thing.
Okay, so basically $7 billion expected for FY'25 also.
The $7 billion is the total budget. Out of that, supposedly our sector receives an inflow of close to $1.52 billion.
Okay, great. Thank you, sir. That's it from us.
Thank you. Participants, you may press star and 1 to ask a question. The next follow-up question is from the line of Aditya Welekar from Axis Securities. Please go ahead.
Yeah, thanks again for the opportunity. So just one question, Pranav and Dhruv. So in the last call, there was some mention of adding color-coated lines and galvanizing lines in addition to DFT lines. So any color on that? Where are we on that?
Again, Aditya, everything is online. To give the exact timelines, it's a little hard right now, but everything is in same as the target time that we mentioned last time.
Okay, fair enough. That's it from us.
Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Thanks everybody for spending the time out of the busy schedule for the call. Thanks Nuvama and Shobhit for hosting the call for us as well. Hope everybody has a nice day.
Thank you.
Thank you.
On behalf of Nuvama Wealth Management, that concludes this conference. Thank you for joining us. You may now disconnect.